Hi, everybody. Thank you so much for joining. And I mean, what a day, what a night. If like me, you've been up all night, I know you're starting to feel it now, probably, but there's so much to talk about, so much movement in the market. I mean, whatever you want to say, this is a red wave of support for Donald Trump, but also for the Republicans. They're about to win. They've won the Senate. They did very, very well in the House as well. And of course, they got the White House by a margin at the moment of 279 electoral college votes to 223. Donald Trump also won the popular vote, which he didn't do in 2016, and by a margin of about 4%. And he also did better than he did in 2020 and 2016 as well. So what we can say is that Americans have become more Republican, certainly in the last 4 years. But this has had massive implications for financial markets. And actually markets started to turn probably about 2 to 3 a.m. Yesterday, when it looked like that Trump was starting to win some of it by a bigger margin than what was expected, and also those key swing states. So what have we seen? Well, let's bring up the first chart. This is a chart of sterling US dollar. So it's sterling. Oh, sorry, this isn't. Sorry, this is a chart of Bitcoin versus the US dollar. I do apologize for that. But Bitcoin is a key part of the Trump trade. The Trump trade is back on. As you can see, it rose to a record earlier today. So Bitcoin has really, really risen on the back of it. Remember, Donald Trump, he is a big supporter of Bitcoin, and that has really surged. Now, on the downside, one of the charts I was going to show you, but I'm not this time, was the surge in the dollar as well. So cable, or the pound sterling rate, the pound has really fallen. It's back below 130. It's back below 129 at the time of writing. And likewise, euro dollar is back below 108. Now, there are a flurry of analysts out there that are revising down their expectations for euro dollar in particular for the rest of this year. And they see that ending the year at 105. So part of this big Trump victory has been a return to the Trump trade. Remember, that had been going on, being priced into the market in the last month, but it really came off the last day or so, but it's back on now with a vengeance. Now, the second chart I do want to show you is commodity prices. So what I want you to look at is the far right-hand side, which shows the percentage change. And what, as you can probably see, it's all a sea of red for most of the commodity space today. So we've got weakness, Brent crude oil, for example, down more than 1.2%. We've also got gold, and that is down 0.7%. Now, some people have been saying to me they find that really strange, but there are a couple of reasons for it. Firstly, oil is falling. Now, Trump is pro-oil. He has said in his victory speech, actually, that he wants more oil. However, it is worth noting that if he wants the US to use more oil, he also wants them to pump more oil. So that will mean more supply in the market, as demand has been dwindling a little bit. But we do think that Trump, being very pro-oil, will probably put a floor in the oil price around about 74, maybe even 73. So it won't go too far below that. And we could see a bit of a turnaround. But for now, the oil price is weaker, and that's because extra supply from the US. The gold price as well, that is down 0.7%. And we think that that is largely because of a few things. Firstly, a stronger dollar. The gold does tend to fall when there's a stronger, when the dollar strengthens. And secondly, that's because it's priced in dollars, I should say. Secondly, because with Trump winning, and such a clear-cut win for Trump and the Republicans, including winning that popular vote, that really reduces the chance of any civic unrest. So no need for gold to act as a safe haven. And thirdly, we've also got the fact that it's not acting as an inflation hedge tool. Donald Trump's policies are expected to be inflationary. But one thing he didn't mention in his victory speech, and he mentioned a lot, it was a long speech earlier this morning, but he didn't mention anything about tariffs, and that's what's said to be inflationary. So that's why we've seen a really strong boost to risk sentiment. And I will show you the last chart that I have to show you now, which is US stock index futures. So S&P 500 futures, they are absolutely surging. They are above 5,900, 5,950, I think, at the last count. So another record high expected for the S&P 500 today, when US markets open at 2:30 London time. And what we're expected to see is the 48th record high of the year. So this is really risk sentiment surging. Donald Trump is expected to be good for the economy. The fact that he has control, that the Republicans have control of the Senate and potentially the House as well, means that it's a clean sweep for Republicans. They can cut those taxes, they can cut that red tape. The markets in the US are really responding to it. Banks really leading that charge forward, because banks were seen to be quite badly impacted by a Harris win. So that's being all priced out of the market. So really, really strong risk sentiment. Now that's spread around the world. We've also got that in Europe as well, with European stocks higher. But overall, big win for Trump and a very much a risk on sentiment for financial markets. So thanks so much for joining, and we'll see you soon.